Important note, this video is not financial advice. Always do your own research before making any investment decision. Past performance does not guarantee future results. Here's your market briefing from Rumour with AI. Crypto markets are fracturing along regulatory lines as Coinbase officially launches U.S. Perpetual futures. This move directly challenges the CME Group, which has filed a lawsuit against the CFTC in federal court. The legal battle reshapes onshore leverage access, creating a bifurcated landscape for institutional crypto exposure. Meanwhile, on-chain data suggests a pause in long-term holder distribution. Galaxy Digital's Alex Thorne reports that dormant Bitcoin movement has hit a 4-year low. This metric, last seen in Q3 2022, indicates that OG wallets are holding steady rather than selling into volatility. On the macro front, Wall Street is bracing for a second consecutive weekly loss. Tech earnings have disappointed, failing to justify current valuations. Simultaneously, crude oil futures have surged 10%. This spike is driven by escalating hostilities between the United States and Iran. The convergence of weak tech fundamentals and rising energy costs is creating a toxic mix for equity indices. The S&P 500 has broken below key technical support levels. Treasury yields, the US dollar, and oil prices are moving in tandem. This macro triple threat is signaling deep institutional anxiety. Sector rotation is accelerating as capital flees growth stocks for defensive havens. Geopolitical sentiment is shifting globally. Pew Research data reveals that China has surpassed the US in favorability across 36 nations. This diplomatic realignment coincides with Q2 GDP figures hitting 4.3%. The economic resilience contrasts with the softening political narrative. Secretary of State Rubio met with Wang Yi to address these tensions. The meeting underscores the complexity of US-China relations. Market participants are pricing in the risk of further decoupling. Trade flows and supply chain dependencies are under scrutiny. The divergence between economic data and political rhetoric is widening. Investors are watching for policy responses that could alter global trade dynamics. Looking ahead to today's release, the economic calendar remains quiet. No major high-impact data points are scheduled for the next 36 hours. This absence of fresh macro catalysts allows technical levels to dominate price action. Traders are focusing on support and resistance zones rather than fundamental surprises. The lack of data releases means volatility will likely be driven by geopolitical headlines and crypto regulatory developments. The market is in a holding pattern. Positions are being adjusted in anticipation of the next major data dump. The quiet calendar amplifies the impact of any unexpected news. Volatility may spike if geopolitical tensions escalate further. The absence of economic noise leaves the market vulnerable to sentiment shifts. The interplay between crypto regulation, energy prices, and geopolitical sentiment is defining current market dynamics. Coinbase's entry into perpetual futures challenges traditional exchanges. Oil's surge reflects geopolitical risk premiums. China's rising favorability alters long-term trade expectations. The S&P 500's breakdown signals a shift in investor confidence. The dormant Bitcoin metric suggests underlying strength in the asset's holder base. These factors are converging to create a complex trading environment. Investors must navigate regulatory uncertainty, geopolitical risk, and technical breakdowns simultaneously. The market is pricing in multiple scenarios. Flexibility and risk management are paramount. The quiet calendar offers a brief respite but does not eliminate underlying tensions. That's your market briefing. Follow Rumour with AI for daily market intelligence.